What's going on, guys? Nick with Mission FX here, making this video for you guys. It's Saturday here, markets closed. We had a really awesome trading week this past week. Did 12% on a managed account. I did 8% on another investor account. On my personal account, I don't remember what percentage it was, but it was from like 18,000 to 19, a little over 19,000. So whatever percentage that is. So everything was a great trading week last week. A bunch of great setups. I'm going to go over a couple of them here and then a few lessons in risk management as well as patience. There's one of these trades, Euro Australian dollar, which was really testing a lot of people's patience last week. I'm going to show you guys that one in a second. But for now, let's look at this trade we took. This trade that took days to work out. So here we're looking at dollar yen on the daily, and right here I want to highlight this pattern that we see all the time. Which is what I love. It's Elliott waves, as you guys know. So oftentimes this is typically how people draw it, right? They've got your little range right here where the market's shopping, and then a breakout and retest of that range. Then you have an extension, and then a pullback, and then a final extension even further before you typically see like a divergence happen, like right here. This was a divergence, okay? High, higher high. There's a high and a lower high, or the peaks are arguably flat, but still RSI is not linking up with the main chart data. Price is showing it's very, very, very overbought. In addition to that, price is also at a significant level. A lot of you guys may or may not follow this, but I only trade wave 5 divergence if that divergence spikes up to a significant level. So this right here is a very solid level to be looking for divergence in, because right here the price is literally just coming and tapping at previous level where it's been rejected a lot in the past. If you wanted, you could have also brought your level up to here. That's perfectly reasonable. Let me get all this stuff out of the way. Price could have come up to here to make the divergence. I was in a trade on a lower time frame right in here, here, and then I stacked up in here. So 3 positions, very, very small risk. I think I only put about 4% of the account at risk across all entries for these trades. Plus or minus a little tiny bit for the different accounts I was managing, because there has to be a different lot size and stuff. But this right here was a pretty solid trade, and if we go to the H4, I want to show you guys this right here. We can see we had a divergence right here. Okay, so from here to here. So we had this divergence, and then on top of that, price spiked up a little bit higher even before we had just this massive decline, this massive price just collapsing right in here. And this was on a Friday, okay? We waited all week for this trade to develop. So yeah, really, really great trade. I love it when the market makes its fast moves up, its fast spikes, because you have to understand the mentality for the reason that we're placing trades. And the reason we place a buy is because we think that a bunch of other people are about to buy, causing price to jump up. And the reason we sell is because we think a lot of other people are about to sell, causing price to decline. So let's say that this is the price of coffee, and the price right here is, let's just say it's $10 for right here. Okay, this is just an example. And people start buying coffee at $10, and price goes up and down for like a few days, a few weeks even, right in here. And then price goes up and it gets above, it's $15 mark, and then it comes back, and then it starts going up to see like, let's say the $17 mark and the $20 mark, and then a lot of people start buying coffee in here at the $20 mark because they see how much price of coffee is going up. Everybody wants to get in to make money on selling the coffee. So if they know if they can buy it maybe at $20 in here, or $15 in here, or $10 in here, they can sell that coffee at a higher price, and once they get a higher price, they can make money on that coffee. So, $15, $20, price goes up maybe to $25 to $30, and then everyone who bought coffee down here at the $10 mark, the $15 mark, or the $20 mark, they're like, wow, coffee's $30 now. I've made $10 profit per bag of coffee, or $20 profit per bag of coffee, however much their profit margin was. They're like, wow, you know what? I can sell. Price was kind of going sideways in here. It was having a little bit of trouble going up, but now that the price of coffee finally shot up, This is great. I can sell my coffee right up here for this high price, and I've got a bunch of people willing to buy because everyone thinks it's going to keep going up. So they sell coffee. Since a bunch of people sell, price rapidly declines, drops in here to the $20 mark, drops here even lower till maybe like the $16 mark, depending on how we're going to label this. This is just an example, like I said. And you're buying coffee in here, they're like, wow, look at this huge discount. Price of coffee was 30 bucks. That's crazy. So price jumps up here. From here, price goes up from maybe 16 to 17 to 20 again, 25 bucks, and then it gets here. Maybe let's just say this is 28 bucks. Last time it was 30 at the highest price. As it gets up there to 28 bucks, a few people probably anticipate, oh, last time price got to 30 bucks, it declined. I'm gonna go ahead and get out here a little bit sooner so that I can take my profits. So people who bought in here at 16 bucks and price is now 28 bucks, they're happy. So they sell and price drops for a little bit. Now people see a discount of 20 bucks in here. So maybe coffee right in here is like 20, 25, whatever it is. And they're like, wow, price has been going up pretty steadily. It came back and popped right back up. It came back again. I might not be able to get a better price on coffee. So you know what? I am going to buy coffee now. So they buy coffee for 22, 25 bucks, whatever it is. Then price goes up to 30. They're like, you know what? Last time it was 30. It dropped. So I'm just going to take this little profit right here I got. Price drops, but then price pauses, and price continues going up. Now, something I want to show you guys was this little pattern right here, this little wedge pattern. This little wedge pattern typically means most of the time there will be a breakout in the direction that the wedge continues. And we're going to look at this a little bit more. I would like to sort of, I don't know how I should illustrate this best, but this little area right here, I want you to look at the mentality behind this. You can use this in confluence with the divergent strategy and also determining how long to hold a trade, whether or not you need to close it out early, whether or not it would be a good idea to place a different stop loss or profit target based on price action to avoid losses. But let's say price is right here at $30 per bag of coffee, and then price sharply declines. So okay, this is a pretty significant level where people, every time coffee's been $30 in the past, it's sort of reversed. And so then price comes up, taps the level, comes down, but it doesn't come down as far. Okay? Then price goes up to 30 again, comes down, but doesn't come down as far before it starts going up again. This little wedge pattern, this triangle pattern, if you look from here to here and here, as price taps the level over and over, consistently failing to go lower, if it keeps tapping that level, eventually it gets so constricted up in here, you'll typically see a breakout of that area. Okay, so that's exactly what happened here, and we see this pattern happen a lot. If you want to look at this right here, this is another good example of how price broke out in this little triangle pattern. Price goes up, it comes down, it goes up again, comes down but not as far, goes up, comes down but not as far, and it goes up until finally it gets so constricted that you see the breakout. That means that every discount buyers are getting, buyers are jumping in and they are buying. They are buying. And typically you'll see these break out to the upside. Same thing, for the other way around. If you're looking at it like downwards, if price is, let's say that price is like, at a level, it's coming down, and it goes up a little bit, but not as high, and it comes down to the level again. Then it goes up a little bit higher, but not as high, and it comes down to the level again. Typically, what you'll see right here is price will just crash through that level and come down. So the Elliott waves don't have anything to do with it. That's just to illustrate the pattern. And we'll look at them a little bit more too here in a bit. But yeah, so this is the pattern that happened up here. Price kept on trying to make a run for this level over and over and over. If you were in a sell somewhere in here, you could have seen this pattern happening, and you could have made the decision to close out on a retracement and break even or a small loss, anticipating that, okay, people are still buying right here. I'm going to get run over by buyers if I'm going to sell in here for any reason. Like some of you guys know, a couple weeks ago I took a sell in here. This was divergent on the H4 and H1, and I took a sell right there. We made pretty healthy profits. I then took a sell right in here, and I think this one got stopped out before coming back down. And then I didn't take any more positions until this past week up in here, because we have this really high price at this significant level. So so that's that wedge pattern I wanted to show you guys. So we'll go ahead and continue with the actual analysis. So price continued going up, and as price was going up, it made this divergence right here on the higher time frame, which is the daily, and also on that lower time frame H4 that I just showed you guys. So I was in positions right here, here, and here after I saw price start to make this little reversal pattern and was divergent. And this is just your classic divergence, okay? So my target for this was about 200 pips, which seems like a lot, but it's really not, because the length of the move was all this right here, and we're just taking it back to the previous highs. Just like you guys know, wave 5 divergence at a significant level, you just trade that initial divergence back to the previous highs. So mine was the flat number of 111.0. So right in here is where I'll be taking profits. Depending on where the market opens Sunday, and if we have good momentum downwards, I may close a little bit sooner, and I'm talking maybe like 20 pips, 30 pips sooner. Just it all depends on where the market opens. But you got to understand, in a movement like this, nobody is going to be buying that until it gets back to the previous significant level. Otherwise, they're just going to get run over. Price is way too expensive up here. People are going to wait till price gets down to maybe this trend line right here. Something like that to like start looking to buy again, because that'll be a good, trend line area. Maybe like a 61.8 from that peak to the peak that it'll form down here. So maybe a 61.8 fib discount, and maybe a the significant level right here. So a bunch of people may start to buy in here, and a bunch of people who are selling up here are going to look to take their profits down in here. So this will be a great spot to close the trade at. And like I said, maybe even a little bit sooner. I would probably close it if it gets to like 11.2. Probably right in here and starts chopping around. I might close it right there. But very, very, very good. A couple hundred pips between all entries for this trade. So this is a solid trade this past week, guys. And you see, if we entered right in here, here, and up here, this took a few days to play out. I mean, it took all week. 1, 2, 3, 4, 5, even maybe a little bit of last week, if anyone would have gotten a position right in here based off a lower time frame divergence. So it just takes patience. But at the end of the week, guys, this ended up coming down 8%, 12% growth. Some of you people, and I don't know if you're watching this, if you're in my free training or if you're in the clients group, but some of the people in the clients group doubled their accounts this week off of a bunch of different currency pairs because we had a lot of good setups, and they were not even risking that much. I had one of my students, Vincent Acuna, his name's Gray Karma in the group, but he doubled his account this week. I think actually it was more than that. He went from like 800 to almost 2,000, or a little over 2,000 or something like that. But it was over 100% growth this week, and so I messaged him, and I was sort of like upset at him. And I was like, "Hey man, I don't understand how you doubled your account this week. You must have been over leveraging or not using proper risk management." And it was the same situation as Momo last week, and I was like, "Momo, how did you double your account? Man, you went from like 2,600 or whatever to over $5,000." Man, and that was like, that's really crazy. That's like, you must have been over leveraging, but he wasn't. Momo was using like 0.1 lot sizes. And then for Vincent, so the student this week who doubled his account, he was using like 0.05, and his max position size was like a 0.1. And like that was just insane to me. And I looked at all his entries. He showed me his trading history. We went through all the trades together, and he told me his reason for each one, where his stops were. And he wasn't risking that much per trade. A little on the high side. I mean, maybe closer to 5% risk per trade. But this guy, you got to understand, he started his account at $200, 200 US dollars 2 weeks ago. The first week he grew that 200 to 800, and he had two pretty big losses as well, but he still managed to grow it to 800 using proper risk management. And in addition to that, he grew it, another 1,200 this week to make the account at around 2,000 now. And that's the kind of stuff that is possible. I don't want to say that's even probable, because if I can grow an account 10 to 20% per week, I am a god. That's crazy growth. That is insane. And if you can do it consistently like I've been, and like a lot of my students who taken the training seriously have, that is just outstanding growth. Like 10% in a week is just crazy. I'd be happy with 5 to 10% a week, but man, like even 20 to 30% a month is just ridiculous. And I have some students doing this in a week, controlling risk, using proper risk management. And so that's what he did, and he did it off trades like this, like where you enter like right up here at the divergence, right there at the significant level, and you start seeing wicks. This one, I think for some reason he entered in here, and he also took a trade right here, but he only had 2 positions open for this trade for a maximum of a 0.1 lot size, and then he closed it down in here. He closed all trades before the weekend, And then so he made just under, I think just over 150 pips across those two entries. You know, that's like a little over 150 bucks depending on where he closes trades at. But I know he got in one right here on the wick, and that's like 150 bucks just off that. You do that for a few other trades. I mean, what's your risk? Like if you're looking at risk as far as trading this divergent strategy, let's say you enter right there and you just put your stop just above that high, with the idea that, okay, we're seeing wicks, and so I'm thinking the market will reverse. So let's just say you get a bad entry and you enter down here at the close of the candle and you put your stop just above that high. So you'll see you're risking around 60 pips and your target is down in here like his was. Let's say so like 125 pips. That's about reasonable. And this is on a bad entry. You have a risk reward of 2, and so if you slowly leverage into your position, like with like a 0.5% risk for the first one, or maybe like 1% risk for the first entry and another 1% for the second one, or you can do for him like he does 2% risk per trade and he'll stack to make like a maximum maybe like 5% account risk per trade, which like I said is a little bit on the high side for me. You know, that creates a little bit of discomfort for me, but for him that works. And if he's growing an account and he's willing to take a little bit higher percentage risk to grow the account, then that's okay because that fits his trading psychology. For me, it doesn't. It's just me. I'm only comfortable risking a maximum on the crazy side, 3% per trade. You know, but for him that works, and it's working very well for him because he's still controlling risk very well. You know, risking 4% to grow the account. You know, 10 to 15% per trade. And if you're winning most trades and taking very, very high probability trades where you know, okay, if the market has done this, this, and this, if I enter right here 80% of the time, I know the market typically turns right around and I get little to no drawdown, then you can start to leverage your account a little bit and start, you know, profiting off of that leverage and profiting off of getting the right entry and getting everything timed properly. So that's exactly what he did here, and he did this. You know, took this trade, he closed it out. I'm still in this trade, like I said, pretty solid. But yeah, it came right into profit very, very quickly. 2 daily candles, and it just jumped right into profit. Friday is where the meat of the move happened with this big, strong, bearish candle, and we'll see what price does when it gets into here. I fully expect it to come to 111, which will be an extra, I think, 2.5% account growth. You know, if it comes all the way back down into here, so that'll be really, really good. So yeah, there was that trade right there. Very solid trade. Again, guys, this was just a little Elliott wave pattern and divergence at wave 5. Another way I like to teach the Elliott wave pattern is instead of doing the whole 0, 1, 2, 3, 4, 5 thing, just wait for the market to push up 3 times. Wait for it to be in a range or make a peak, and then a reversal pattern like head and shoulders or, you know, whatever. I don't really teach any of that. But wait for the market to just reverse out of a range, and then just count the levels. Say, okay, price makes its move and then consolidates. Then price makes another move and then consolidates. And then price makes a final move, and typically at that final move is where you'll see price reverse. Okay, so this 1, 2, 3 pattern happens all the time. All you have to do is you just count like the consolidation. This wouldn't really be considered like a, I mean, this would just be considered that last level, but typically just the, you know, 1, 2, 3, and then you see a reversal. And this, like I said, this pattern just happens over and over and over again. You know, you had the market going sideways in a range up here, broke out and chopped, broke out even further and chopped. So this would have been like our second little, like number 2. And then you have number 3 down here where the market just kind of chopped downwards sideways for a week. So you see you have our range and then 1, 2, 3. Down here you had all sorts of divergence. See, going up, these are going down. You could have bought in here and it's safe to trade back to the previous peak. You could have bought down in here and it's safe to trade back to the previous peak. Then a break and retest, you can re-enter. So yeah, it's just a solid reversal pattern. But I mean, it just works over and over and over. Just that little 1, 2, 3 pattern. Sometimes it's hard to kind of see. This one wouldn't have been as clear. This you can sort of see. Price came out, barely retested it, and then shot up. But if you're looking at this in terms of movements, we have a price movement right here before it chopped, retested, or whatever. We have a price movement right here before it chopped, and then it moved out of that range and moved to the top before this divergence pattern occurred right here. As you can see, these peaks are going up, these peaks are going downwards. I've just seen the same pattern a million times, so I can already tell if it's divergent without even having to check an indicator. But yeah, so just trade this little 1, 2, 3 pattern with the divergence. It works out so well. Let's go look. I'm not going to take a whole lot longer. I know you guys don't want to sit through a 30-minute long video every day of your life. But yeah, let's just take a little look at this little price chop. So euro dollar, wow, this is a crazy pair. So on the daily, I took a buy on. Okay, so I was going to take a buy, but I forgot to put my limit down in here. I actually think, yeah, I didn't. So I didn't take a trade. I wanted to so bad, but I forgot to put that limit. But let's look at a trade I'm actually in right now, which was GBP US dollar. Okay, so when we look at price movements, you look for the 1, 2, 3, and then you look for divergence at a significant level. Okay, so I've always, like I've shown you guys before, I draw out my levels on the chart. This down here is a very significant level, and so I was looking at this as like a potential reversal down here. This is also somewhat of a significant level, but it's not as clear as down in here because we have multiple interactions at this level. This level up here is okay, and it's still a level that price could reverse at. As you can see, price still interacted with it. But this one down in here was just like a really huge level that price just continuously just reverses at in the past. So that's what I was looking at. So I was sort of waiting for a price right in here because I knew a lot of buyers would jump in right here. As you see, it's exactly what price did. Came in here, made a little quick liquidity hunt or a quick little stop hunt to confuse people and make them think it's going to keep dropping before it comes down. And yeah, but I took this trade. So let me show you guys why I took this trade. I'm going to try to clear up this chart as best as I can. I've got a few lower time frame trends and stuff drawn in here. But let's just look at it in terms of levels. Price was up in here. So it was chopping kind of sideways. I'm sorry guys, there's so many ads. This is insane. So price was like chopping up in here. It cracked the lows of that range and then started chopping. So here's the little number 1 right here. We had an area where price chopped again in here. You can just do it right there before it exited that level and made wave 5 and then a divergence. So this last area right here would be considered, if you're looking at Elliott waves, it's wave number 3 technically has to be the longest, but I find that it still works out fine if you just wait for the 3 pushes, as long as the wave 5 forms and then another divergent low forms. As you can see, this was divergent right here. It's it's just a great trade. So just wait for that little 1, 2, 3 pattern. This, I wouldn't have considered that a consolidation because it doesn't look like it broke out of a range well enough. I know this is a clearly defined range, like here's our highs up here of the range, here's our stop hunts that like spike really far out of it, but I know this is an area, so when it breaks that area, I know, okay, after it breaks a range, it typically chops 3 times before making a divergence. That's exactly what happened right here. So down in here, I was looking at that, also combined with the confluence of prices also at a significant level. All the way back in here from like last year in May. It's just a crazy, huge, significant level. So that's after the 3 chops. So I had buy limits right here on the lower time frames. I'm going to show you guys what this looks like on the lower time frames. So this is the lower time frame, H4. Again, here's our 1, 2, 3. On the H4 though, this is what was going on. So I waited for price to get to this level. And then after price spikes at the level, it's a level that everyone's looking at. So what I did is I entered right in here when price got back to these previous lows, because I know that, okay, we've had our divergence and we've also had price coming back to test these lows. So I had a buy limit in here. Price went into profit and then it made a little reversal and then a quick sell-off downwards. Price got down into here to this previous low, jumped up and then spikes down really quick. I love when price spikes down really quick like that because it cracks that level. And it cracks that level, meaning a bunch of people are getting stopped out and confused. But if you've done your analysis right, then you're always going to be safe. Most of the time, but that's why you control risk, okay? So this little move should not have stopped you out if you were trading this based off divergence, because in the higher time frame, it's just a little stop hunt. It should, like, a move like that shouldn't make you fearful and scared and questioning whether or not you're going to blow your account. I mean, it was like, 50 pips or whatever it was, quite a bit of pips, but if you're using a small position size and just controlling risk, like, you should have been stacking on that. That's a great price to buy at. Price has already been going down forever. Don't get manipulated out of the trades that are divergent at those levels like that. So I had a buy limit right in here which got executed, and another buy right here, and then I manually looked at this and entered again on Friday. opening a maximum of a 0.5 position on the account I'm managing with my client Momo. I gave him $10,000 to trade, and I'll place a few trades a week on it as well. So we entered this trade maximum. I think there was like a 0.1 in here, and then a 0.2, and then another 0.2 down in here, and this just went right up into profit. That's how you know you got it right, is because right after like the skies are very dark and gray, you see price pop up, and then it makes this little huge reversal right here. So I'm closing at 132.0, which is right in here. So let me just get this the best I can. So right in here is where I have a take profit set. A couple reasons my target is right there. First reason, probably the most identifiable, is we have this going on right here. Okay, downtrend. Let's move it even lower to include this peak right here. Yeah, it chops through it right here, I get that, but this is the level where it's respected the most. If we close our trade right here, we're getting out at a significant level right in here. Okay, see if I just extend that. That's a significant level. So we're getting out right there, and in addition to that, we're getting out before price comes to try to interact with this trend line. And this is still, I mean, you gotta understand, it's still like a solid, 200 pips from our best entry somewhere down in here. That's still a solid 200 pips. And then when price gets right there, what we'll do is we'll watch to see price action. Does it get rejected from there very quickly? Does it come up and then get rejected quickly and start coming down, or does it come up and stop everyone out before starting to come down? Also, what would be really good is if on the H1, if it makes an Elliott wave pattern up to there, or like a little 3 pushes up to that level with divergence, and then starts to show signs for reversal, then we can look to sell this market and then take another 100 pips back down here to the previous lows. It's all confluent, so that's why I put my target there. I don't want to be interacting with this trend line, because I'm thinking we're going to see some sort of pullback, some sort of profit taking up there. I like to get out before everyone else starts looking to trade, because I'm taking my money, I'm getting out. I don't want to be a part of the manipulation. I don't want to be praying to God that this trend line breaks and tests and continues upwards for like 1,000 pips. So I'm gonna be getting out right here, a very modest 200 pip take profit, with good percentage account growth, with very, very small risk across all trades. Up here it comes out to be, less than a 1-to-1 risk reward, but that's why you scale in on your positions. That's why I scale in, is because I know, depending on price action, if it shoots up from here, it looks like you got this right, but they're not going to give you all that money without sort of stopping everyone out first and manipulating price to make people get scared and close their positions, because this looks like a clear buy, and I think this was even like a head and shoulders reversal pattern where you have one push right here, a push lower, and then a push back to retest that previous one before price going up. Really, you just want to see price make a very drastic move up, a deep pullback, and you want to get in somewhere in here to go long. But that didn't happen right here. Price pushed down here. That's why I had that limit right in here. Once it got executed, it's a very good entry right here, a good entry down here, and then an even better one for the divergence, scaled in to a full position size to risk a small percentage amount. Maybe you're risking 1 unit of risk for about 2 units of gain across all entries here. So this is really, really good, guys. Really solid setup. Same thing happened on AUD, USD, and a bunch of other pairs. But yeah, I just wanted to share those with you. And also, I wanted you guys to recognize that patience. If you're trading on the 240 chart or the daily chart, you gotta be patient. You gotta wait for these things to play out. If you're in a trade like UJ, where everything looks good, everything looks fine, you've got divergence, you've got wave 5, just take your time, wait. It'll happen in the most random moments usually. Like for this one, it was on a Friday, where it just crashes after you're in. I mean, you get in and it just starts crashing. But control your risk, use small lot sizes relative to your account balance, and that just means only risking, really, I say never more than 3% of your account per trade, and that's on the aggressive side. But if you only have like $500 to trade, I'd say if you've traded demo consistently for 2 months and you know exactly where your entry should go, exactly where your stops should go, exactly where your target should go, if you feel confident enough, then yeah, maybe you can risk 4 to 5% per trade. Just understand, you've got 4 bad trades, you've got 20% of your account gone. But if you're okay with that mentally, because the dollar amount isn't that much, then just do it that way. But when you get to managing big funds like me, like one of my accounts is $50,000, a personal account that's around 20, and then the one I'm trading with Momo is 10K. So I have a couple different accounts, and I have 3 other investors that I trade for. And so in total, like if you're managing large amounts of money, you don't want to be risking like 5% per trade or 10% per trade. That's just insane. Like of the account, just on one bet, you got 1/10 of your money gone if you lose. and it's just not worth it. So control that risk, control that risk, control that risk. This video is 30 minutes long now, so I'm going to go ahead and end it here. Hope you guys have a great rest of the day. Hope you guys learned something new. If you guys have any questions, reach out to me. Price Submission Effects mentorship is going up pretty soon here. I want to sort of monetize my program a little bit more. I haven't really been making a ton off of it. I just give away as much as I can for free because I know you guys really want to learn. I know you guys really want to learn some good stuff, and you guys want to be able to trade profitably. It's really simple. Just take your time with it. Be patient. Find a mentor. It doesn't have to be me, but find someone you can learn from. You will pay for your training, whether it's in losses in the markets, whether it's in time alone, which is crazy. People will spend 2 years learning on their own, then to pay someone, a couple $100 to learn from a course or something. Whether it's time or whether it's, whether you just pay for a course like mine or like someone else who teaches, someone that can trade, someone has consistent results for a few years. Just learn from someone. It makes it so much easier on yourself. It's a couple $100. Make the investment in yourself. That's probably the most important thing you can do. But yeah, my prices will be going up probably next month. Right now it's July 21st right now, so I'm gonna say August I'll probably increase my price a little bit to try to monetize a little bit more, because I do a lot for free, and I make a fraction from mentorship of what I do actually trading. This week I made almost 8K in personal profits, and I think I only did less than 1,000 in sales. So it is what it is. I like teaching, I like getting out there, I like helping you guys, and it's always fun to trade with people. It's boring to trade alone. The trader's life is a boring life, contrary to popular belief. If you're trading the right way, it's very, 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 very boring. So it helps to have people around you that are trading like sort of the same system as you. So yeah, that's all I got for you guys today. You guys have a great rest of the day. I'll see you guys soon. And if you guys have any questions, reach out to me. Thanks for watching. This was Nick with Mission FX. You guys have a beautiful trading week. Bye.